Hello everyone. Have falling oil prices and a potential US-Iran peace agreement changed the outlook for the euro? Not entirely. In fact, the bigger story for currency markets may be the European central bank's growing determination to fight inflation. The euro has climbed above 1.1600 levels against the US dollar, reaching its highest level to nearly 2 weeks high. Market sentiment has improved after the United States and Iran announced a preliminary framework to end their 3-month conflict and reopen the Strait of Hormuz, a route that carries nearly 20% of global oil shipments. The development triggered a sharp decline in crude oil prices and boosted demand for the riskier assets. However, ECB policymakers remained focused on inflation. Eurozone inflation currently stands at 3.2%, well above the central bank's 2% target. Last week, ECB raised interest rates by 25 basis points for the first time in almost 3 years, and policymakers have signaled that additional tightening may be required. ECB officials like Peter Casimir and Nagel have both warned that the recent energy shock could continue to impact the inflation even if the oil prices decline. Markets are now increasingly pricing in another 25 BPS rate hike as early as September. From the technical perspective, on the daily moving chart, the pair can be seen showing signs of strengthening momentum. The pair has moved above the 25-day SMA and the median line of the regression channel, showing positivity for the pair. A sustained break above the symmetrical triangle resistance near 1.1640 could open the door towards 1.1680 and potentially 1.1750. Immediate support can be seen near the 1.1540 to 1.1560 region. So the key takeaway is that while the geopolitical tensions may be easing, the ECB's fight against inflation is far from over. As long as inflation remains elevated and markets continue to price additional rate hikes, the euro is likely to remain supported against its major peers. Thank you and stay tuned for more updates.